Yeah, guys, good morning. As we know, guys, company, a company is an artificial person, no body, no soul. In case of a company, there is the diverse between ownership and management. Ownership lies in the hands of the members of a company who's created throughout the country, not available for day to day affairs of the entity. Hence, they appointed the board of directors. So, board of directors are managing the company. So, they are the persons responsible for keeping the proper books of accounts, selection of the appropriate accounting system suitable for the entity, and management is responsible for the selection of the accounting principles which are applicable, accounting policy or principle, and they are keeping the all the financial statement. The management is there within the company. The owners are created throughout the country. As a director, I have kept the some books of accounts. We maintain the financial statement and we are submitting. Whether this information furnished by management is true and fair. How do I know? It may be manipulated data, it may be fake data, it may be a hookup data, though transaction was not taken place. As if transaction took place, they may record the books of accounts also, because I am not there as a owner. So whatever you are furnishing, that information I have to accept, so that the management of a company prepare these important documents like a books of accounts, financial statements, selection of the accounting system suitable for our entity. Of course, company point of view, double entry system we have to follow. And accounting policy. Accounting policy, always the best example, depreciation policy. Right way we have selected or not, we have to certify. Someone has to certify these things. That person is called auditor. So in case of a company, the members of a company at the annual general meeting, by passing one ordinary resolution, appoint the auditor. They passed one ordinary resolution, they have appointed auditor. What auditor has to do? Auditor has to hear. What is the meaning of audit? Audit means, audit is a word which is derived from the Latin word adire. Adire means to hear. He has to hear from someone. If you remember, way back, Kautilya Ardhashastra, you can come across the concept of coaching, verification. Audit concept is there. We see 4000 century only, we know the concept of auditing. So generally, what auditor will do? He hear from someone. Audit is the word which is derived from the Latin word adire. Adire means to hear. If you remember movies, old movies especially, the Jamindar was laid down on this easy chair. The accountant was just standing there, and he will keep on telling, this is what we spend, this is from this. And the Jamindar was listening to him. And at the end, he will ask one or two questions. At the end, means the books are maintained by accountant. That was given account to the manager, and he is listening. Wherever he got a clarity required, he will ask. Otherwise, it's the oldest one. Whereas now, in case of a company, this is the criteria. Why auditor? Because there is the separation between the ownership and management. As a management, you are keeping the records. Whether the records maintained by you is representing true and fair view, I don't know as a owner. I want one authentication certificate. so that the shareholders of a company at a general meeting, by passing one ordinary resolution, we appoint auditor. Auditor will examine, review the financial statements, and he has to certify at the end the books of accounts of financial statements are representing a reasonable assurance over the financial performance of entity. And the profit was stated is June, the financial position stated is the true and correct. But a true and fair review is going to certify on the books. In simple, I would say like this: head office at Hyderabad. Our branches are there throughout the country. In 28 states, we have the 28 branches are there. The head office communicating information to the each and every branch from time to time. Branch 1 to branch 28. We are giving instruction, direction, what is to be followed. Whether the branch manager or persons working at a branch are following my instructions meticulously or not. How do I know? Because I won't go to the branch. Whatever information furnished by them, that's going to be the final for me. I have to rely on the information given by that. Information is genuine or not, I don't know. Then head office will send a person go and do the branch audit. Means the instructions, directions given by the management from the top level head office to different branch offices. Those instructions were letter and spirit they have implemented. Otherwise, they may cook up the data as if they have followed and submit a report. So for verification sake also, you can send a person to branch audit. So audit is the only purpose is to know whether books of accounts are representing or financial statements are representing. And you please understand, there are some stakeholders in a company. Who are the stakeholders? Like investors, shareholders, suppliers, employees, government, society, creditors, competitors. Strategic management, you know meaning of a stakeholder. Same word is up. In case of a stakeholder, I want to make investment in a company. I want to take an investment decision. I want to withdraw my investment from a company. In both the cases, the investor has to check the auditor's report. What is the financial performance of the entity? You will understand, with that you can take a decision whether to make investment or not. Whether to continue as an investor or to withdraw from company, you will be able to understand. Originally, there is one concept called management audit. If a management audit report is available, I can take a promptly decision whether should I continue as a creditor or not, as a supplier or not, as an employee or not. He will give a meticulous information about organization. In India, there is no much prominence for management auditor. Outside India, management audit, investor want to make investment, he will see only management auditors, not the others. Management auditor's report is from organization's vision and mission to director's capabilities also he will comment it. And with that, you are able to take a decision whether the organization got any vision accordingly, right? So let us see the definitions and continue with the concept. Here some concept were given here. Introduction part, I would say definition. You will understand only from, I explain about only ICAI definition. I believe in ICAI definition, that is, it is an independent examination of the statement, records, here not given total definition, you only bits and pieces only. So first I will read out this, then I will tell ICAI definition. A audit is a independent examination of the financial information of any entity, whether profit oriented or not, irrespective of the size and legal form, and when such examination is conducted with a view to expressing an opinion thereon. In fact, it should be, according to ICAI, it is a systematic, independent examination of data, statements, records, information, financial or otherwise, of an entity for any stated purpose. And auditor has to pursue and recognizes prepositions before him, collect the evidence, evaluate the same, and forming one opinion which is communicated through auditor's report. This is ICAI definition. If you see ICAI definition, it covers everything. This definition, if you are able to interpret it properly, entire auditing is there in this. It's too early to discuss everything, but overview I will share now. Again, concept come discuss in detail. Here we are discussing one concept called independent examination. What is independent examination? Auditor's work is not influenced by, directed by, controlled by any person. You are not determining auditor's work. I know what to, what not to. You cannot interfere. Means I am not your subordinate. I am independent person. My work cannot be determined by any person. Myself is an auditor. My client said, we have done the internal audit. Cash book receipt side, there are no variations. And so cash book receipt side, you need not to do, just to do only on payments. Are you not giving directions for me what to do, what not? I don't have any independence. What to do, let me decide. And you don't determine that I have to do only this and you don't do this. I hope you're understanding. Independence means auditor's work is not determined by, influenced by any person. I must have the freedom what exactly to be done. Let me decide as an auditor. Right? If any person impose restrictions or conditions on auditor, auditor is not having independence. In our examination based on this, application based will come. How to be carefully analyze the. And the financial information, what is the financial information? Just like a data, statements, records, information, like a financial statements. What are the financial statements? Trading account, P&L account, balance sheet, cash flow statements, then notes to account. This information I have to gather, right? And of an entity. What is an entity? It may be company, it may be corporation, it may be cooperative society, it may be trust, or it may be a independent financial audit. Maybe in case of a sole proprietary concern, otherwise a partnership, audit is not compulsory for them. They want still, they can go for of any entity, which means it may be profit making entity or non-profit making entity. Audit is compulsory. Once it is a company, under the Companies Act 2013, audit is mandatory. Maybe a profit making company or a Section 8 company, non-profit company. They have to go for audit. So certification of audit is compulsory, right? So this is whether profit oriented or not, irrespective of the size and legal form, means irrespective of your turnover. Once registered under the company, private company, public company, holding company, subsidiary company, associate company, joint venture company, otherwise a Section 8 company, once it is a company, irrespective of the size of the company, you have to go for the audit. Okay? And whether that is a size and legal form. Legal form means sole proprietary concern or a partnership concern, limited, where the audit is not mandatory. In case of a partnership, if the turnover is individual's point of view, in gross total income is 40 lakhs and above. In case of a business firm, 1 crore and above, audit is compulsory. Otherwise, purely option. And when such an examination is conducted with a view to expressing the opinion, auditor will give only opinion. Auditor's report is mere opinion. I felt after exam. If I refer the ICAI definition, what they said here, it is a systematic, independent examination of data, statement, records, information of an entity. It is a systematic. What is a systematic? Generally, we speak this language. Hey, I'm very systematic man. Means I behave in a orderly manner. I know do and don't. What to do, what not to do. I know pretty well. Everything I pre-plan. Then only I do the things. Some people are there very systematic in their life and never take the chance in their life. They wanted to see that it should be a success. So very systematic means orderly behavior, means pre-planned, right? Other one is independent. I told you, independent means your work is not influenced by, determined by any person. If it is a systematic, independent examination of data, statements, records, information, whether financial or otherwise, means profit oriented, non-profit oriented of an entity for a stated purpose. For a stated purpose. What is the stated purpose? Admission of a partner. Audit purpose is different. Retirement of a partner. Audit purpose. Death of a partner. Settlement of account. Purpose is different. Takeover of a company. Purpose is different. Sale of a company, purpose is different. So you tell the purpose clearly. You want to do merger of two companies. If you tell the purpose, according to your purpose, auditor will cater the things. You have to tell clearly for auditor. When I go to doctor, I should tell what is my problem clearly. If I explain the problem, then he will able to diagnose my issue and he will give the proper prescription. Similarly, auditor also must know what purpose he is appointed. Tell clearly what is the stated purpose. I want to sell the branch, so and so branch. Accordingly, I will do my audit. A company would like to borrow loan from the company, particular bank. I want to borrow the loan. If you tell the purpose, accordingly, because what to borrow, a lender want the projected profitability for the 3 years or 5 years, he will ask. I will go certification accordingly. If you tell the purpose, I will do. Otherwise, I will do only true and fair view and certify and go off. That's a stated purpose. Tell clearly amalgamation, merger, internal reconstruction, external reconstruction, sale of a company, admission of a partner, retirement of a partner, annual returns you want to submit, declaration of dividend. You tell me purpose, man. As a client, if you tell the purpose, according to purpose, I define my audit plan, audit program, and I will submit my report. So purpose we have to say. That's why stated purpose, right? Stated purpose. In any auditing situation, auditor has to recognize the prepositions imposed before him. Nothing but what exactly management want, I should understand. What the student want, if I know, accordingly I can give the best. And when I don't know what exactly you want to, definitely I have a confusion also what is to be delivered for. Similarly here also, auditor will recognize the prepositions before him by the management and collect the evidence. He has to collect the evidence. You have given the data, statements, records, everything is there. Now I have to collect the evidence. What is the evidence? Evidence is a prima facie proof that transaction occurred. Evidences they has to collect, and the evidences are two types. Internal evidence is there, external evidence is. When both the evidences are available for a particular transaction, I have both the evidences, internal evidence as well as external evidence. Auditor can rely on external evidence. Remember these words, and the latter part we repeat many times this vocabulary. Whenever transaction took place, both the evidences are available, internal evidence as well as external evidence. Auditor will give importance, rely only on external evidence. For any transaction, external evidence is not available, only internal evidence. It can be accepted. Are neither internal nor external, then should disqualify. Otherwise, management will give letter of representation. Management should accept it. Yes, this transaction took place. That's called management written representation. or management letter. At least management should certify. Always keep in mind, without voucher, auditor must not accept the transaction. It may be internal, external. If no voucher available, neither internal nor external, at least management should certify. Is occurred. Then only I will accept. Otherwise, qualify the transaction in the records, and auditor got no authority to accept everything and as he like, right? Evidences. Always keep in mind. In between the internal and external, which is more reliable? External. Why not internal? Internal evidence can be manipulated every chance. It can be, people can change whenever they want, they can change the evidence because purely internal affair. But external, it's not so easy to manipulate. So for any transaction, both the evidences are there, internal and external. He gives importance for external. When external is not there, of course internal, but you have to see the sufficient appropriate audit evidence. You must give importance for sufficient appropriate audit evidence. What is sufficiency? Remember, quantity. Sufficiency means quantity. Appropriateness means quality. Only these 2 points you must verify. Sufficiency means quantity. How many evidences are available for a particular transaction? Second one is appropriateness, means quality. Auditor must see whether this is sufficient appropriate audit evidence. Sufficiency means quantity of evidences. How many evidences are available for particular transaction? Other one is sufficiency, means quality of evidence. Means it's properly done it or not. Auditor collect the evidence. If both the evidences are not there, go with management letter representation. Simple management letter or management representation. Any word can be taken. So collect the evidence and evaluate the same evidence. We have to examine properly dated, properly signed, lender's name, borrower's name, signatures are there, dated, quantity. Verify everything. Proper sanctioning is there. Means that that is going to be quality wise. Means valid fake document. How to examine that as an auditor? And collect the evidence, evaluate the same. After evaluating the evidences, you will form one opinion. In this organization, these books of accounts of financial statements are representing whether true and fair view or not. That is communicated through auditor's report. Auditor's report is mere opinion. There are 2 types of opinions are there. Modified opinion. Other one is unmodified opinion. Unmodified means unqualified opinion. And modified opinions are again, one is a qualified opinion, adverse opinion, disclaimers opinion. SCA 700 is there. We have later part we are going. So I felt, so auditor's report is classified into 2 types. One is a modified opinion, other one is unmodified opinion. Unmodified also called unqualified opinion. And modified, the word itself is giving a meaning for you. Modified means subject to change. Modified opinion means it may be a, again, qualified opinion, adverse opinion, and disclaimers. At a nutshell, if you want, I would say the 1 sentence explanation for all the 4 words, because we come across this vocabulary in the due of interpretation. Unmodified means clean sheet. Whatever information I have asked, management furnished. Whatever query I raised as an auditor, I got a satisfactory explanation from the management. And evidences were sufficient, appropriate audit evidences are available. Top level executives of the company are having the highest integrity. Integrity means honesty and straightforward. And hardly I can, nothing that I can object. Then what I would say? Unmodified. Whatever information you have given is up to the mark. There is no suspicious data. There is no concealment. There is no fraudulent activity. I haven't seen anything which is irregular within the entity. And the top level people were having a highest moral value, legal value, ethical value, nothing to be objected there. And information furnished was sufficient and appropriate, and a reasonable assurance is drawn. Then finally, I would say these books of accounts are representing true, fair, and unmodified, means clean sheet. Everything is available. When I did the watching, when I go for verification, nothing I have found. Everything is perfect. Then I can give unmodified. Then other one is modified. Modified means subject to change. I need some clarification. As an auditor, I raised a query. I raised the total 20 queries. Out of the 20, 10 queries were satisfactorily disposed. Disposed means cleared. Whereas the 10 queries point of view, there is a satisfactory explanation. Can you give the clean sheet? I would say. I want a clarification on this. Then I will give the qualified opinion. Qualified means condition. Qualified means a condition. What exactly it means, and see, according to voucher, 100 ACs are purchased. Payment also made. I did the watching. When I did the watching, perfect. When I go for physical verification, watching, remember, what is the meaning of watching? Occurrence of the transaction. Watching will tell only one thing. Transaction occurred, took place. That's all. Verification means it is in existence. Watching is applicable to P&L account item, and verification applicable to balance sheet item. Always keep this simple word into mind. You can have a better clarity when we debate the concept. Watching means transaction occurred. Verification means it is physically in existence. 100 ACs are purchased. Payment also made. I took the voucher, posting, verified, done. Proper approval is there, payment was made. Excellent. When I sent my assistant, go and count how many were there, I came to know only 70 ACs are physically there. There is a deficit of 30. I raised the query. I need a clarification on this 30 ACs. The management gave the clarification, but not a satisfactory. They were saying that we here only, not replying properly. No one is responsible. Each AC they paid 40,000 rupees. 30 into 40, 12 lakhs rupees. Means 12 lakh rupees. Fraud is there in this entity. Will you give a clean sheet? Then what I say? Voucher number so and so, dated so and so, purchased 100 ACs, 70 ACs are physically there, subject to clarification for 30 ACs. I am giving this report. If we give the clarity for 30 ACs, well and good. Otherwise, 30 ACs worth of the fraud is there in this entity. Qualified means condition. Because I am not getting a satisfactory explanation from the management, I want to give a clean sheet, give clarity on this. Qualified opinion. Okay. Other one is adverse opinion. Adverse means the negative comment. When fraud is there, you will give the adverse comment. Under section 143 subsection 12 of the Companies Act, whenever he detect the fraud, you must comment on that. 143 irregularities. Nothing but your books of accounts of financial statements consist of the material misstatement. There are material misstatement. What is the material misstatement? Remember 4 points. ACDP. Material misstatements may be in ACDP. What is A? A means amount. C means classification. D means disclosure. P means presentation. Regarding these 4 points, you haven't done properly. A means amount. C means classification. D means disclosure requirement, disclosure, and P means presentation. So whenever you see the word material misstatement, generally auditor must certify that these books are representing the true and fair view regarding there are no material misstatement in the financial statement. Means amounts were correctly stated. Classification means regarding the capital expenditure, revenue expenditure, deferred revenue expenditure properly classified, and disclosure requirement according to the accounting standards, and as well as the formats were there. Financial reporting framework. This word remember, financial reporting framework, which means we are talking about formats only. Format. Wherever you come across this word, financial reporting framework, remember as a format. Format means we know company point of view, balance sheet has to prepare according to part 1 of the schedule 1. 1 or 3? Schedule 3. And other one is in case of a P&L account, part 2 of the schedule 3. Formats are given. In that format only we have to prepare. Whether prepared or not, auditor has to certify. That's nothing but a financial reporting framework. Disclose the requirements of presentation. Nothing but wherever possible, applicability is there. Accounting standards we have to follow. Accounting principles we have to comply, properly presented or not, we have to examine. If there is any deviation, departures are there, state categorically. What could be the financial implications on the entity? So material misstatement means ACDP. A means amount, C means the classification of transaction, and D means the disclosure requirements, P means presentation side. If there is anything as such, you can make a representation. That is nothing but adverse report he will give. And finally, this is disclaimers report. Means he refused to give the report to the client. Why he was refused to give a report? Time being, remember some examples. Topic wise, we'll discuss much more. What it is exactly means, I have come for audit. You are my client. By the time I came to know your books of accounts were seized by income tax department, excise department, customs department. No books. Yesterday night, raid was conducted and books were seized by them. But you haven't informed to me. But as usual, I came for audit along with my team. Then I understood there are no books. But you said as a client, no problem, sir. Give one report and go. Later you can do anything. Will you give a report as an auditor? Disclaim. On account of the fire, books are destroyed. Will you give a report? No. Generally, two situations. Books of accounts were seized by authority, or books were destroyed on account of the fire. Disclaimer. Remember, without audit, I can't give the report. Disclaim. Okay. So this is an overview about a ICAI definition. What is ICAI definition? It is a systematic independent examination of the entity for a collection of the data, statements, records for a finance or otherwise for a stated purpose. Auditor has to recognize the prepositions before him, collect the data, evaluate the same, and which is communicated through auditor's report. ICAI definition is there. The definition we have to buttify. Okay, now let us see our ICAI material. Definition already we have seen the interpretation, and now let us see. It is the in situ analysis of the above meaning as such. First one is a independent examination. I told you. Independent examination means the judgment of a person is not subordinate to the wishes or the directions of another person who might be have an engage with him. Nothing but auditor's work is not influenced by any person. You cannot give directions or instructions to auditor about do's and don'ts. You do this, you don't do this, you cannot. Auditor should be an independent entity whose financial statements are subject to audit so that he can form an opinion without being affected any influence. Your dad is having a business, successful businessman. You are a qualified CA. Can you do audit of your own father's business? No. At the time of dinner or a lunch or a breakfast, he will influence you. Definitely, beta. I was the person. Huh? I gave everything for you. Can't you do this much favor for me? Come on, guys. Whatever I make money for you only, na. I won't take away along with me. Every chance and emotional drama will be there, and who knows, he may be ill for it. That's why you cannot. Your work easily can be influenced, isn't it? Chance is. That's why you should be like a movies. We can't behave rudely. We can't speak with our parents. You can't be so sincere and honest like in the movie. Real life, it won't happen. We are all emotional, sentimental fools. And mom said, dad said that to emotional drama. Dad showing the tear means we can't stop anything. We are ready to anything and everything for him. But this man is crying in front of me. My God. No, no, no. I will do anything for you. I am the financial doctor. Auditor is the doctor for the financial health of organization. And he knows how to diagnose any irregularity, and he knows how to cure it also. That's why I know, dad, I will manipulate. Cool here. You are not going for jail. I am there for you. Every chance, and that's why you cannot. And independence encourages the auditor's ability to act objectively without creeping off any bias, no personal bias. And consider an example, same one, this is. A person who requests his brother, chartered accountant, to audit of accounts of his proprietary concern, sole proprietary concern, issue a report. Can CA audit of accounts of the concern in which his brother is a sole proprietor? Answer is no. Because both are brothers, one can definitely influence another person. And he cannot. Because it is due to the fact that there would be no independence in such a case due to the relationship by birth between the CA and his brother. And he would be subject to be influenced from his brother. Definitely, an emotional drama will come one day, definitely, when you detect the fraud. And take another example, CA invested in a particular company. You are qualified CA, Akshara, and you are as well a shareholder in RIL. RIL, you are a shareholder. Now, RIL want to appoint you as an auditor. Can you be the shareholder as well as auditor? No. Prohibited. Because you are invested means you have interest over the company. If any irregularity in the company, you won't reveal. Why? Your investment is there. If I report the irregularity in the share market, company will collapse. My investment also there, na? Why should I dig for myself? That's why number of people will support this kind of situations. And that's why if you are a shareholder in the auditor disqualification, this is one of the point. Auditor himself or through his relatives are holding any securities face value up to exceeding rupees 1 lakh cannot be appointed as a auditor. The company law will discuss this point will come. Okay. And less than 1 lakh allowed. But if you want to, sir, I got a 1 lakh worth of shares, but I am a qualified CA, who will forego the Reliance Industries auditship, sir? I want to become shareholder. Do one thing, you transfer our shares. You transfer our shares, and the share must not be there in your name, then you can become auditor of a company, right? Though you have a shareholders, now we do one thing, transfer our shares, your brother or sister's names or someone's name. You become independent person. Then can continue as a auditor, right? Okay, we'll see in the disqualifications of auditor. Can audit accounts of such company which he holds shares? Answer is again no. And it is because of the fact that holding the shares of a company, his own in self-interest gets involved and his own money invested in the company, and he may not be able to form judgment independently on the financial statements of entity. Definitely my money involved. If I certify and otherwise, the company will collapse and my money also you lost. Definitely people got a concern. Other one is where the entity whose financial information is examined need not necessarily be profit oriented, like in case of a business, And a non-profit organization, companies like a NGO, charitable trust, audit can be undertaken in respect of any organization, small, medium, large. It can be conducted irrespective of any legal structure, that is, entity can be a sole proprietary concern or a partnership, LLP, private or a public company, society, trust. This is what I explained here. Entity, profit oriented or not, it is in a size and a legal form. Already we have done this part, right? And so irrespective of the size, audit is compulsory there. For the purpose of audit, express an opinion on the financial statements. He is expressing his opinion on the financial statements, and doing so, he should see the financial statements would not mislead anybody by ensuring that. So why audit means these parameters he has to certify. See this one, accounts have been drawn up with a reference to the entries in the books of accounts. What are the financial statements? P&L account, balance sheet, cash flow statements, then notes to accounts. This is the drawn from books of accounts maintained by client. See to that entries are made in the books of accounts with the proper vouchers. There is no manipulations. That is the first clue. So exactly from the books on information was taken. There is no other kind of information. The entries in the books of accounts are adequately supported with sufficient appropriate evidence. That's called sufficient appropriate audit evidence. This is a phrase, and always try to use abbreviation. Sufficient appropriate audit evidence. What is the meaning of sufficiency? Sufficiency means, I told you, quantity. What is the quantity? Purchases are there. Purchases. Sanction from the board of directors. Second, purchase manager has to place the order. Third one, receiving the goods at gate entries are made. At stores department entries were made. At gate, at what time entry was made. At what time stores entry was made. If we make a comparative, we'll understand same day, same time. Is there any change of huge gap is the time? 4 or 5 hours time is the difference. You can understand why this late. You can question on that. That's why time also they will mention. And payment made by accounts department. See, 4 places, only one transaction. At 4 places, evidences are available. 1, sanctioning authority. 2nd, centralized purchases. 1 person place an order. 3rd one, receiving by another person. Payment by another person. 4 persons involved. At 4 places, collect information, collect evidences on the same date. If the 4 places evidence is one and the same, accept it. Nothing but a quantity. Sufficiency means quantity. Other one is appropriateness means quality. Nothing but everything is properly mentioned. Proper sanction, proper signature, and quantity wise. And you have to see the description was given. Everything is nothing but is there any suspicious over the instrument of the voucher. And other one is none of the entries in the books of accounts has been omitted in the process of the compilation. True and fair view, one concept is there. No asset is neither overvalued nor undervalued. No, there are no unrecorded assets in the books of accounts, which means transaction took place but not entered into the records. Because misplacement of the voucher is there, it should not happen. Here also that's a point. None of the entries in the books of accounts have been omitted. Everything got recorded. Okay. And information conveyed by statement is clear and unambiguous. Means clear, definite. Ambiguous means vague. How much quantity of the raw material purchased? Quantity was not mentioned, but price is there. Amount paid is the rupees 5 crores. How much quantity? Quantity is not there. Per unit price was not mentioned. Then how much quantity paid for this? What is the price? How can I certify this? So your voucher is somewhere defects are there. In the audit notebook, assistants will write this entry and refer to the auditor. So voucher is there, 5 crores paid, but quantity was not mentioned. Supplier name also clarity was not there, and per unit price also not mentioned. These two you will make an audit note given to the auditor. Then the auditor will raise the query. Voucher number so and so, dated so and so, payment was made 5 crores, but quantity was not there, and per unit price was not mentioned. Supplier details were not there. Please provide. If they provide, you accept it. Otherwise, qualify. Regarding this is a fake information. This transaction doesn't took place. Sensing? Another one is financial statements, accounts are properly classified, described, and disclosed in conformity with accounting standards. Wherever applicable, accounting standards we have to follow under section 133 of the Companies Act. It's a mandatory provision. Whatever applicable, wherever applicability is there, see to that you are maintained your records with the applicable financial statements. If there is any material deviations from the accounting standards, auditor has to state quantifiable effect, which means how much profit increased, how much profit reduced. Quantify means state. Don't say that since this accounting standard was not properly followed, there may be some loss. Some loss means how much? 100 rupees, 1000 rupees, 1 crore, 5 crores, 10 lakhs. You can't make a vague statement. You should make a quantifiable amount. Because of this AS2 not followed for inventory closing stock valuation, the loss would be rupees 250 crores, 100 crores, 10 lakhs. Quantify that. Then only it will be appreciated and accepted. And a statement of accounts prepare true and fair picture of the operational results of the assets of liabilities of the entity. What is the true and fair view? Please write any 6 lines or 5 lines I will give. True and fair view. True and fair view. In our examination, this is one of the question, very important. True and fair view. Concept of the true and fair view. First point. No asset is neither overvalued nor undervalued. No asset is neither overvalued nor undervalued. Second. All material changes in the assets are properly recorded. All material changes in the assets are properly recorded. Third, there is no unrecorded asset in the books of accounts. There are no unrecorded asset in the books of accounts. There are no unrecorded assets in the books of accounts. Point 4. No liability is neither overvalued nor undervalued. No liability is neither overvalued nor undervalued. Next. Balance sheet is prepared according to part 1, comma. P&L account is prepared according to part 2 of the schedule 3 of the Companies Act 2013. Next. There is a consistency. In accounting policies. There is a consistency in accounting policies. And the last one. All unusual, exceptional, non-recurring items were shown separately. All unusual, exceptional, non-recurring items were shown separately. All unusual, exceptional, non-recurring items were shown separately. Okay. Now see all the 5, 6 points or 7 points are there. See the first three pertaining to asset side. Next one for liability. Next one is for financial reporting framework. And next one is about unusual items. One is for accounting policy. If you know clue, you can easily adopt all the points. First one is no asset is neither overvalued nor undervalued. It should reflect the current market value. That's it. For that best example, and you could say cost of acquisition of a material or market value, whichever is lower. Whether represented or not, you have to check it. Nothing but wherever applicable, see to that how to show the, for example, I want to show the best financial performance. If I don't provide the depreciation, if I provide the less rate of depreciation, definitely profitability will go up. Otherwise, I don't want to show the good performance of entity, then I can increase the rate of depreciation, wrong rates can be applicable and profits can be come down. Thereby remember, no asset is neither overvalued nor undervalued. Second one, all material changes in the books of accounts are properly reflected. AS10, you remember PPE, there you come across and any asset was acquired during the period, any asset was sold out during the period, discarded, but discontinued from the operation, it should be removed from the non-current assets register. Whether the changes are properly registered or not verified. As one simple logical, opening balance of the PPE will be examined through last year's audited schedule. Current year purchases you can verify through the sanctioning point of view. Sale of any asset if any, what is the closing balance was given, whether it is representing correct or not. So nothing but all sale of the property if any is properly removed from the register or not. That's why all material changes. What is material? Substantially affecting. That's wherever you come across that word materiality, you remember this word. Materiality means substantially affecting. Our profitability may either abnormally increase or abnormally decrease. So that if there is any substantial change in the operations of entity, it should be reflected. So all material changes in the assets of entities are properly reported. Third one, there is no unrecorded asset in the books of account. What is unrecorded asset? I don't know how many of you did the accounts on. When I was a student, I come across this. NTC, especially accounts, when you do, in adjustments will come across one line. Typewriter was purchased on so and so date, which was not entered into of accounts. Then what we do? We make an entry from the date of purchase to closure of the year. Depreciation will provide, and we show in the balance sheet on asset side. Earlier we used to do in a horizontal balance sheet. So asset was purchased, but entry was not made. Means unrecorded asset. Thereby see to that there are no unrecorded asset in the books of accounts. Means everything is properly recorded in the books. Next one is no liability is neither overvalued nor undervalued. Third one is fourth one. Fifth one is balance sheet and P&L account format was followed. If there is any departure from the format, again grouping of items are there. What items will come under the current assets, so fixed assets, non-current assets, so schedule was given. In that, whether the grouping also followed or not, auditor need to certify. Any departure, report in notes to account. And other one is see to that there is a consistency in accounting policy. This is very important. See to that there is a consistency. What does it mean? Last year, what was the depreciation policy we have followed? Diminishing method. Current year, same. There is a consistency. Last current year financial information can be compared with the previous year 1, previous year 2, previous year 3. Then you will understand last 3 years what was the depreciation policy followed. Same followed. There is a consistency. If there is no consistency, you have to question. I want to show more profit. I want to show less profit. If I change the depreciation policy, it will automatically reflect it. Sometimes I will say straight line method, some years I will say diminishing method, sometimes I will say weighted average method. Finally, if I want to show the more profit, I can change the depreciation policy. Then auditor has to see to that there is a consistency in accounting policy. Can they change accounting policy? Yes, accounting policy can be changed. When? 3 conditions. 1. ICAI recommended change the depreciation policy. Change. According to ICAI guidelines, accounting policy can be changed. Or law got amended. Change in the law. They said new accounting standard we have to follow. Follow. Change of law. Third one is, if I change the accounting principle or a policy, my books of accounts can be presented in a better way, then change. Otherwise, no. So only 3 conditions, and when accounting policy can be changed. 1, ICAI recommended, or law got amended, or the last one is, if I change the depreciation policy, I can present books of accounts in a better way, means compared to existing, I can give the good efficient reporting system, then change. Otherwise, no. Any change in accounting policy, especially depreciation, is a prospective or retrospective. Prospective. Always prospective, but only one exception. If I change the depreciation policy, abnormal fluctuations are there in profit. Abnormal fluctuation, then only retrospective. Otherwise, always prospective applications we have to make. Fine. These 3 points also please do remember. Auditing provides an assurance. Its basic nature lies in providing assurance to the users, providing the confidence to the users of the financial statements. Such assurance lends credibility to the financial statement, and the audited financial statements provide confidence to users, and financial information reflects in the financial statements can be relied upon. Simplest example to understand this one, sir. You are just qualified CA. You got a COP, certificate of the practice. Age just 22 years, 23 years. You joined in a company as an auditor. If you certify the records, age 23, signed as a CA, if you certify that information, based on that, the bank will give a loan, investors make a decision, government authority believe. Whereas, same statement was signed by senior accountant. In our company, one senior accountant, BCom passed in 1960. Joined in our company, got almost 40-50 years of experience. Wonderful person, honest person. 40 years of experience. People say, no, 30 years industry, here 50 years industry. And signed man of values. He signed. Based on his report, will any banker give a loan to you? Never. That's why A is a miracle word ending. With that tagline, you can create your life and maybe getting little difficult. But once you got that tag, and you can mint money like anything. You need not run after money. Money will follow you. Otherwise, everybody will run after money. CA need not run after money. It will follow you. Wherever you go, network follows na Hutch advertisement. That pug also. Anybody remember? Right? Now, wherever CA go, money also will. I'm not exaggerating the things. Fact is that. Anyway, my contention is, even the 30-40 years of experienced person, senior accountant signed, it got no reliability. Whereas one accountant just CA, passed the CA, got a COP and joined in a company as an auditor, signed with 1 year of experience also. Everybody, all stakeholders believe. And they will take a decision, either investment decision or lending or not, they will take a decision. That's why reliability part, it plays important role. Okay, no? Now guys, interdisciplinary, nothing but auditing, how it is connected with other subjects. And this part is only, see, this part you remember. If you want to become an auditor, you must have at least basic idea about various subjects. You need not be an expert, but at least basic idea if you have, definitely you are able to assess the transaction. That's why interdisciplinary. I think you verify all this. You know accounting, you know law, you know economics, you know behavioral science, and you know statistics, data processing, and financial management, production side. Somewhere you come across all the vocabulary mean. So that after got a basic idea, he is not a layman about any subject here. And if I am a layman, whatever you say, I have to believe. For example, right now, some people don't know what is the AI. Some people are expert in FICO, SCAP, FICO, finance and costing. And I don't know that FICO, SU. Then whatever you say, how to listen like this? I don't know, no? But you are going to certify certain things, man. If I have a basic outline, I need not be an expert. If I have an idea, whatever you are saying, I am able to correlate with my knowledge and able to give proper interpretation on that. That's why. Accounting and auditing. Auditing reviews the financial statements, which are nothing but a results of the overall accounting process. What is accounting process? And you know, bookkeeping, accounting, auditing. What is bookkeeping? Journal entry, ledger posting, balancing. That's all. Keeping is only this. Take the voucher, give the posting into ledger books. Right? Entry, journal entry we are writing first. Then posting into ledger accounts. And next one is balancing. That's it. That's bookkeeping. Where bookkeeping ends, there your accounting will start. What you will do there? You prepare the trial balance. From the balances, you take the trial balance. Once the trial balance agree, what do you say? Arithmetical accuracy means postings were correct. Exceptions may be there, compensating errors and all. I am not discussing. Broader view when you see. And therefrom you prepare the financial statements. It consists of the profit and loss account, balance sheet, and consolidated financial statements and notes to accounts. Where accounting ends, there auditing starts. There are interlinked subjects. Thereby, if I am doing my auditing means I must know something about accounts. Of course, basically, we know what exactly all these things we have learned. Other one is auditing and law. Auditor should have the good knowledge. Remember this word, not a expert knowledge. He must have the good knowledge about business laws which are affecting the entity. I would like to do audit of a company about Companies Act 2013. I must have knowledge. Then only I know whether compliances were properly satisfied or not. I am doing audit of a bank audit, then I must know banking regulation. I am doing audit of a trust, I must know Trust Act. I am doing audit of a society, I must know Society Act. Then only I will understand whether I am able to give the best report or not on that. That way, I must have the good knowledge, not an expert knowledge. I must have basics on that. Other one is auditing and economics. Auditor is expected to be familiar with the overall economic environment of the client, organization point of view within the entity. Audit and behavioral sciences, nothing but a human behavior is essential for the auditor effectively discharge his duties. But he must know, other person he must be able to read and auditor must able to read opposite. Now we don't have communication originally. Communication subject was there previously. When communication was there, with the communication you will understand it. When a person is walking, the way the person is walking, the way person sitting is the facial expression, finger movement, you will see whether that person is going to be your client or not. Auditor knows that. The way he sit also will understand. The way he walk, the way he speak, the facial expression, especially the finger movement will tell what exactly he is thinking. The way you sit also will speak what exactly running in your mind. So, anyway, auditor knows pretty well human person working in a organization. When I go to organization, I have to deal with not only client, different section of the people. I should read them. And who is the honest, who is pretending to be honest. You must know everything thereby. Auditing and of course statistics and mathematics. Auditor must expected to have the knowledge of the statistical sampling, because sampling techniques they has to follow. 100% audit is impossible. So I have to adopt the sampling technique only. At a random, I have to select the few transactions. How it should be selected? I must have the thorough, at least some good knowledge on statistics. I know that I can apply stratified sampling, random sampling, which one I have to follow based on the size of entity, I will decide. And the meaningful conclusions and the mathematics for the verification of the inventory. And auditing and data processing, EDP, electronic data processing, computer based. You must have some knowledge, basics on computer, of course. After passing the CA intermediate, when you go, computer training is there for you. They will give the basic input as an auditor, what you should do, right? And EDP auditing itself is developing as a discipline itself today. And of course, I think all of you know, any company 1000 or more shareholders are there, how to keep the records only on electronic basis. So definitely you must know how to do audit on online. And other one is auditing and financial management. Auditor is expected to have knowledge about the various financial techniques, working capital management and funds flow, ratio analysis, capital budgeting. One of the paper he will study in that. Definitely it's going to be thorough knowledge. Auditing and production. Auditor is one who undertakes the client and his business functions like a production, cost system, marketing strategy, etc. Marketing, he must not have thorough knowledge, but remaining to production and costing, definitely on the production, we have a process costing. Otherwise, the various types of the costings, when he is teaching operating costing and all, you know definitely something about the production side. Our cost system, cost sheet is there, you know pretty well what exactly to do. So you are interlinked with the different other papers and where you must understand that. Okay. This is for today ending.